Guys, in this S&P 500 weekly technical analysis, I will tell you about a major change that is happening in the S&P 500, in the Dow Jones, in the Nasdaq, and in a manner to the entire US stock market. And that change is primarily in the momentum. Because for some time, the MACD of the S&P 500 was holding bullish, but now it has turned bearish, and exactly the same configuration, the same thing is seen in the Dow Jones. This is why a new ATH is now delayed. However, it cannot be denied that there will not be a new ATH, a new all-time high, but it is for now. For now, it is delayed because of this change in the technicals. And if in the week of August 24th, if the S&P 500 fails to close in a special pattern, in that case, there will be no new ATH at least until October. This is why as of now, any bullish movement will stuck into the 7,700 range, in between the 7,700 and the 7,800, somewhere around 7,704x. And only if certain conditions are met and the S&P 500 manages to give the daily closings continuously above the 7,700 and also above the moving averages, then there will be possibility that in the next week or the first week of September, we may see a new all-time high in the S&P 500. But at the same time, if the S&P 500 fails to recover and sustain above the 7,700 psychological mark, in that case, there will be heavy chances that S&P 500, which is already under the bearish momentum, is trading under the bearish momentum, will fall, will come down, and there will be chances for the 7,400 range. Last week, I mentioned the 7,500 range, that is there, no doubt about that. But if on Monday and Tuesday, if the S&P 500 fails and enters into the 7,500, then 7,400 range will be most likely to happen in the week of August 24th. So what will be the actual conditions that will trigger a new all-time high or will actually delay a new all-time high, and how far this bearish momentum can trigger the fall in the S&P 500, and how soon we can see the 7,400 range. All of this I am going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of August 24th. Means from August 24th, which is Monday, to August 28th, that will be Friday. Now guys, let me tell you that how you can navigate this S&P 500 weekly technical analysis. So I have divided it into two parts. First part is the technical part. In the technical part, I will analyze all of the technical indicators and I will show you the bearish MACD and the stochastic RSI, and also the most important thing, if there is any oversold condition, because if the indices hit the oversold condition, then there will be a very huge the bullish retrace, the bullish movement. So all of this I will discuss in the technical part section. Second part is the probable movement. Probable movement means how the S&P 500 is going to work, is going to behave in the next week. Whether first there will be a bullish movement, then the fall, or first there will be a bearish movement and then it will rise, it will struggle and will fall, or will simply move up. So what kind of flow, the movement in the S&P 500 we are expecting, so that will be in the probable movement section. So first I'm going to start with the technical part. So guys, I'm going to start with the technical part, and I have divided the technical part into two sections, weekly chart and the daily chart. Weekly chart means the long-term picture for a month, for 3 months, okay, or for 6 months. Daily chart is the short-term picture for 2 days, for 7 days, for 2 weeks, that's it, okay. So first I'm going to start with the weekly chart. Now, this is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. Okay, let's first analyze the candle. If you look into this, the candle is in the open equal to high condition. Open equal to high means the open price of the candle, which was 7790.68, was also the high for the entire week, and the S&P 500 failed to breach its open price. Secondly, the open of the candle was above all of these the candles, okay, but the closing of the candle was below the open and closing of the previous candle and the closing of the last to last candle, and it is a very heavy bearish candle. It is indicating bearishness, okay, means on Monday there will be an initial or intraday bearish movement. Secondly, not just on Monday, but for the entire week there will be bearish sentiments because of this candle, which is in the open equal to high condition and has fulfilled all of these the conditions, okay. And furthermore, the S&P 500 so far has not fulfilled its obligation to the previous all-time high, okay, which was approx 7621, right? So this is the candle of the S&P 500. Now this is the last weekly candle of the Dow Jones, okay, and if you notice, the Dow Jones has fulfilled its obligation to its previous all-time high. Anyways, the last weekly candle of the Dow Jones, there is no open equal to high condition, okay, but it's the open and the closing prices, the closing price of the candle are below open and closing of the previous candle and the closing of the previous candle. So simply an initial or intraday bearish movement on Monday, and also bearish sentiments for the entire week, okay. So now through the candles, it is clear that the entire stock market, the S&P 500, Dow Jones and Nasdaq, okay, there is bearish pressure, bearish sentiments, bearish momentum, right? Now let's discuss the technical indicators to see if this bearish momentum will actually be realized, okay, in terms of the movement or not. But guys, before that, so far if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now, in terms of the technicals, the S&P 500 is clearly bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. Secondly, the S&P 500 is still holding bullish. You can clearly see it is still holding bullish through the MACD, okay, and the stochastic RSI is also bullish. There is no saturation and no overbought or oversold condition, okay. In this manner, the S&P 500 is still holding its 100% absolute bullishness. This means that the S&P 500 on the weekly chart is 100% absolute bullish, means the long-term trend is still bullish. There is no change in the long-term trend, okay. Whatever the fall is happening, this fall is in the short-term trend. The short-term means for 2 days, for a week or so, okay, but the long-term trend is still holding bullish. This is the chart of the Dow Jones, okay. Now the technicals of the Dow Jones. So the Dow Jones is bullish through the Ichimoku cloud, okay, Bollinger Bands and the moving averages, and also the Dow Jones is, okay, yes, there is a change. The Dow Jones is bullish through the MACD, that's fine, but now the Dow Jones, the stochastic RSI of the Dow Jones, there is a clear bearish crossover in the stochastic RSI, okay. Furthermore, Dow Jones hit the saturation and the overbought condition last week that I mentioned, okay, in my previous S&P 500 weekly technical analysis, that because of that overbought condition, we will see pressure on the entire stock market, okay, for the entire week. So in this manner, the Dow Jones is now, it is trading near to the overbought condition, okay, and the saturation, but in actual it is not. In this manner, the Dow Jones is 80% bullish on the weekly chart, but is still in the long-term bullish trend, okay. The Dow Jones is still in the long-term bullish trend, just like the S&P 500. However, on the daily charts, all of this has completely changed, okay, because on the daily charts, the MACD and the stochastic RSI, they are bearish, okay, and those are the early indicators. This means that we can see or we can expect that change to happen on the weekly chart. Now, because this change has happened and is happening and is impacting the movement on the daily basis, so now let's analyze the daily chart to see a very clear picture, like what will happen on Monday, Tuesday, Wednesday, etc. through the technicals. So let's move on to the daily charts. So guys, we are here and this is the daily chart of the S&P 500. Daily chart means one candle represents 1 day, okay, not 1 week or 1 hour. One candle means 1 day. Now, if you look into this, the last daily candle of the S&P 500, it's a limited bullish candle, very limited bullish candle, okay. Secondly, the open and the closing of the candle are below the 50% of the candle itself, indicating bearishness in the candle, okay. Although it is green, but still it is indicating bearishness, okay. Another thing is that it has failed at the moving average, just like the previous candle. So all of this indicates bearishness and bearish pressure on the S&P 500. And this candle itself is indicating an initial or intraday bearish movement on Monday, but not a gap down open, okay. It is green, but that does not mean that there will be a gap up open or initial or intraday bullish movement, okay. This is simply indicating an initial or intraday bearish movement on Monday, okay. Last candle of the S&P 500. Now this is the last candle of the Dow Jones. This candle of the Dow Jones is very heavy bullish candle. Secondly, it was in the open equal to low condition. Open equal to low condition means the open price was the low. Immediately after open, Dow Jones moved up, okay. And This is actually very rare, because if you notice that on Thursday, on 20th of August, the Dow Jones was, okay, the Dow Jones traded in the open equal to high condition. Okay, and this was indicating a very heavy intraday pressure on the Dow Jones, and Dow Jones was supposed to come down, but because of the GS is what? GS is the Goldman Sachs. The Goldman Sachs helped the Dow Jones to hold and sustain and to be in the open equal to low condition and to sustain bullish. Okay, so primarily it was the Goldman Sachs which has clearly, okay, helped the Dow Jones. Otherwise the Dow Jones itself was not in a condition to hold and sustain, okay, or at least not in the open equal to low condition. So this is indicating, this particular condition of the Dow Jones is indicating an initial or intraday bullish movement on Monday. This is the only case. Okay, and because this is a very strong bullish candle, and also in the open equal to low condition, that is why, okay, it is indicating an initial or intraday bullish movement not just in the Dow Jones but also in the entire stock market, in the S&P 500 and also in the Nasdaq. This condition will override the condition of the S&P 500, because the candle of the S&P 500 formed on Friday. This was very limited bullish candle and was under pressure, indicating the bearishness. Okay, this is, and now the Dow Jones has clearly given a very heavy bullish candle in open equal to low condition. So there will be an initial or intraday bullish movement on Monday. Okay, and this will be through the Dow Jones. Now we have seen just opposite to this, okay, on the weekly chart. So on the weekly chart, what we have seen is that the candles of the Dow Jones and also the S&P 500 on the weekly chart were indicating an initial or intraday bearish movement, but the candles on the daily chart are indicating initial or intraday bullish movement. Okay, this is just the counter movement. What does this mean? This means that, see, this is the weekly chart. Okay, this is the daily chart. This means that the bearishness or the bearish pressure, it will be felt for the entire week. Okay, Monday, Tuesday, Wednesday, Thursday, Friday, right? This, the initial or intraday bullish, the intraday bullishness because of the Dow Jones, it will be felt only on Monday and only in the first half before 12:30 p.m. Eastern time. That's it. Okay, and then this, the weekly chart condition will take over, right? This is how it is going to work. And to give you an example, like on Tuesday, on 18th of August, okay, we can see that there was a very little bearish candle. High of the candle was 7,714 and the low of the candle was 7,688. Now question is that if the S&P 500 lost the 7,700 psychological mark, then why there was not a very heavy fall? Okay, why the fall was limited to the 7,608 hex range and the low was 7,688 only? So the reason was that for many days the S&P 500 was defending the 7,700 psychological mark. Secondly, the lower level charts, these are technicals, were in the oversold condition, the hourly charts. Okay, and also we were looking for 2 consecutive hourly closing below the 7,700 so that the S&P 500 can turn actual bearish and can move to the 7,606x level where it was supposed to get the heavy support. So because of all of this oversold and the 2 consecutive hourly closings, we were expecting a fall up to the 768x level only. So a similar kind of condition, okay, the initial or intraday bearish movement because of the weekly chart, okay, but this is applicable on the entire week. Okay, initial or intraday bullish movement or through the daily chart is applicable only on Monday and only in the first half. That's it. However, once these indices, okay, these indices turn bearish on the daily chart, and there it comes a clear confirmation that on Tuesday there will be an initial or intraday bearish movement. In that case, the weekly charts are already supporting the bearishness or the bearish movement. Okay, then the daily charts will also support the bearishness, and then we will see something like this fall. That was on the 20th of August. The high was 7699.96. Okay, the S&P 500 failed to hit the 7,700 psychological mark only by 4 cents. Okay, and it came down heavily and the low was 7,639. And on that day we were expecting a fall to the 7,606x, Okay, but because the bearish momentum, it was increasing, that is why there were chances that S&P 500 will come down from the 7606x level to the 7604x, and that will be enough. That is where we are expecting the fall to stop in the S&P 500. So once the bearish conditions are seen, then we will see a fall. Okay, something like this. Now let's analyze the technical indicators. So technically the S&P 500 is bullish through the Bollinger Bands, through the Ichimoku cloud, through the moving averages on the daily chart. And the S&P 500 is also but the S&P 500 is bearish through the MACD and is bearish through the stochastic RSI on the daily chart. No oversold, no saturation, nothing like that. Okay, so this means that the momentum is heavy and momentum is in the bearish side. In this manner, the S&P 500 is 60% bullish on the daily chart. Okay, it is still bullish, no doubt about that. S&P 500 is still bullish, but it is 60% bullish. And but remember the momentum is bearish. Okay. Now the Dow Jones. If you notice, the Dow Jones is okay, there is a different situation in the Dow Jones. The Dow Jones is bullish through the Bollinger Bands, bullish through the Ichimoku cloud, but is neutral through the moving averages. Okay. Furthermore, the Dow Jones is also bearish through the MACD on the daily chart and is also bearish through the stochastic RSI on the daily chart. Okay, it can be clearly seen here. Also, there is no oversold condition or the saturation in the Dow Jones, right? So again, the Dow Jones is like neutral. The S&P 500 is 60% bullish, but the Dow Jones is more like neutral. But because because the Dow Jones is still trading above the Ichimoku cloud, okay, that is why it will still be considered as bullish, not bearish. Okay, like the S&P 500. So S&P 500 is also trading well above the Ichimoku cloud. Okay, and all of this. So S&P 500 is 60% bullish. Now, how this neutral condition in the Dow Jones and this 60% bullish condition in the S&P 500 will help S&P 500 trade bullish or bearish. Okay, whether there are any chances for the bullishness, okay, or the S&P 500 will simply fall and there will be the bearishness. Okay, and then any recovery for now will be limited to the 7,700. Okay, what can help the S&P 500 to break or to breach this, the 7,700? So all of that I'm going to discuss in the next part, and the next part is the probable movement of the S&P 500, Dow Jones, and in a manner to the entire stock market. But guys, before I discuss the probable movement, I have this important information to share with you, that I give the daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday to my Patreon community members. And also I give up to 100 opportunities in the premium stocks and the ETFs of the US stock market. And also I give the S&P 500 mid-week update. And here I discuss the precise movement of the S&P 500, Dow Jones, and the stock market. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years. And they are getting these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire stock market every day from Monday through Friday. And also the opportunities, up to 100 opportunities in the premium stocks and the ETFs. And also the midweek update video technical analysis. So guys, whenever you want to join my Patreon community, in order to get all of these, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I'm going to discuss the second part of the agenda of this the S&P 500 weekly technical analysis. And here I will give you the probable movement, means what is going to happen in the S&P 500, Dow Jones, and in a manner to the entire stock market in the coming week, the week of August 24th, 2026. Okay. Now, the first thing first, on Wednesday, the PCE data, the inflation data will be released. This inflation data will heavily influence the movement of the stock market. If by Wednesday the S&P 500 is trading bearish and is in the oversold condition, okay, then and if the PCE data, if it is seen as negative, in that case there will be a heavy gap down open, but then an intraday heavy recovery because of that, the oversold condition. And the same will happen in the counter movement. If the S&P 500 is trading bullish on Monday and Tuesday, but on Wednesday the inflation data goes negative, goes against the stock market, then there will be heavy fall. Then on Friday morning, the Fed chairman is going to speak, okay, and his speech will influence the movement of the stock markets. Now, let's talk about the numbers and these are technicals. So now, in terms of the numbers, what we know is that this was the first closing below the 7,700 psychological mark. This was the second. No, not the second. This was the closing above the 7,700 psychological mark above. Okay. Now, this movement on Wednesday on 19th of August. Okay. This was clearly not supported through any technicals, through any news, through any data. And the market movers were pushing the S&P 500 up. And the high was 7743.93. Okay. So we knew that if the S&P 500, see, there was the heavy resistance at the 772x level. So we knew that any bullish movement will be limited to the 772x level. And if the S&P 500 is pushed beyond this level, if there comes heavy bullish movement or heavy bullish push beyond this level, then the S&P 500, then that bullish push will be limited to the 7738/42. Why? Because of the presence of the moving averages in this the small cluster. And you can clearly see here that the S&P 500 failed because it was supposed to fail at the 7738/42, and this was because of the cluster that was made by the moving averages. So I mentioned this in the pre-market analysis before the open of the stock market. Okay, so that is why it was very much clear. Bullish side will be limited and restricted. Okay, however, the fall will be limited to the 7,700. And until and unless there comes a breach of the 7,700 and at least 1 hourly closing below the 7,700, there will not be any kind of bearish movement. S&P 500 will sustain and will oscillate in between 7,700 and 7738/42. Okay. Now, surprisingly, on Wednesday, 19th of August, the low was 7,700.07. This is why the 7,700 psychological mark will still work for the S&P 500, means it will be considered as the bullish and the bearish trigger for the S&P 500, a barrier between the bullishness and the bearishness, right? Now, the S&P 500 on Friday closed at 7674.37. This was below the 7,700 psychological mark, right? Now, the S&P 500 through the Dow Jones, because the Dow Jones is indicating an initial or intraday bullish movement on Monday, and if this is realized, okay, then the S&P 500 through the Dow Jones will try to move up, will try to test and try to regain the 7,700 psychological mark. And only if the S&P 500 manages to recover and sustain above the 7,700, and there comes at least 3 successive closings, hourly closings, 3 successive hourly closings above the 7,700 psychological mark, then we will consider that now the S&P 500 has safely recovered the 7,700 psychological mark, and now there are very good chances that S&P 500 can close the daily closing above the 7,700 psychological mark. See, these 3 successive hourly closings above the 7,700 psychological mark does not indicate or does not confirm that there will be a daily closing above the 7,700, right? This simply indicates that there are chances that the daily closing can happen above the 7,700, and if the daily closing is actually above the 7,700, then S&P 500 will gain some bullish momentum. See, because of the stochastic RSI and the MACD on the daily chart, S&P 500, it is already bearish. Okay, not bearish. The momentum is bearish. Okay, but if the S&P 500 gains the 7,700, then there will be some relief through the bearish momentum. Okay, means the S&P 500 will get something to counter the bearish momentum. It will remain under pressure. Okay, there is no doubt about that. S&P 500 will remain under pressure. There is no doubt about that. Okay, but at least it will be having something to counter. For example, this was the candle on 19th of August. The low was 7,700.07. Okay, now this was what? This was indicating that the S&P 500 is trying to counter the bearish movement. But because of the special pattern formed here on 19th of August, in my final update, I mentioned to my Patreon community members that if such a closing is seen, in that case, this indicates a gap down open next day on Thursday, okay, and the bearish movement will continue until and unless it hits the saturation or the oversold condition, either the S&P 500 or the Dow Jones or the Nasdaq. And now, because there are two consecutive daily closings below the 7,700, even when the S&P 500 tried, okay, but again, two consecutive daily closings below the 7,700, by default there is very heavy pressure on the S&P 500, right? Clear? Now, what happens if the S&P 500 clears the 7,700? Okay, still there will be the problem. What? Okay, why the problem will be there? 7,700 2x level. Okay, if you notice this, the closing on Wednesday 19th of August, this was 7708 approx, was below the 7,700 2x. Okay, the last closing above the 7,700 2x, it was on Monday 17th of August. After that, these four closings are below the 7,700 2x. This means that the 7,700 2x level is very heavy. So it is not just heavy, it is very heavy. This is why even if the S&P 500 manages to recover the 7,700, okay, then also it will not be safe. To be safe, okay, or to become absolute safe or heavily safe in the bull side, S&P 500 has to recover the 7,700 2x level, must sustain, must give hourly closings continuously and the daily closings above the 7,700 2x level, and then only it will turn bullish. Otherwise it will not turn bullish. See, when I say bullish, I mean safe bullish. Okay, and also gaining and sustaining above the 7,700 2x level continuously on the daily basis, it opens the chances of a new all-time high in the 7,800 range. Okay, and when there will be the chances of the new all-time high, then there will be chances for the 7,900, but the S&P 500 will not hit the 7,900, as I have discussed earlier, okay, many times in my previous S&P 500 weekly technical analysis. Okay, there is a range at the 7,707x/8x. This is where we are expecting the fall in the S&P 500, and the S&P 500 has to fail. Okay, but before the S&P 500 can move, okay, to form a new all-time high level, okay, the first thing is the 7,700 2x level, okay, to help the S&P 500 become absolute safe. Then comes what? Then comes the most important level, 7,707x level. This is the most important level, okay, and this level will define if the S&P 500 is actually in a condition to make a new all-time high or not. Okay, because the S&P 500 is expected to struggle and then to fail at the 7,700x level. Okay, it is expected to fail at the 7,700x. Remember this point, okay, because earlier also we have seen that it has failed and that is why it has come down. Okay, now if something happens, maybe the speech or the comments from the president, okay, or something from the Middle East or something positive or not positive, something very positive, okay, and the S&P 500 manages to move up and manages to breach and sustain above the 7,700 7x level. Okay, this will be on the daily basis, not the hourly basis, but on the daily basis. When this happens, then we shall be ready for the new all-time high level. Okay, and as long as S&P 500 is holding, sustaining and closing above the 7,700 7x level, there will be very heavy chances for a new all-time high to happen. Okay, means the S&P 500 will then comfortably enter into the 7,800 range and will hold, will sustain, will trade within the 7,800 range. Okay, this is there in the bull side, right? But what if, but because of this, the pressure on the S&P 500, okay, what kind of pressure? These two daily closings, even when the S&P 500 tried to sustain and close above the 7,700, after giving these many daily closings above the 7,700, okay, it has tried to defend. Okay, so S&P 500 tried its level best to defend the 7,700, but that is lost. This is the bearish condition. Okay, furthermore, the MACD and the stochastic RSI are already bearish. This means that there is the bearish momentum. Okay, so now the bearish side. But guys, before that, so far if you have liked this video, then please hit like to appreciate, and also please hit the hype button on YouTube to show your support. And also guys, if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the bearish side. Again, it starts with the 7,700 psychological mark. Okay, S&P 500 will try to recover the 7,700. Why? Because of the Dow Jones. Okay, now Dow Jones can help the S&P 500 to try for the 7,700, but it does not mean the Dow Jones does not give any guarantee that the S&P 500 will be able to recover the 7,700. Now we are considering a scenario wherein the S&P 500 try to move up but fails at the 7,700. Failure means that there may come a breach of the 7,700. The S&P 500 enters into the 7,700 range, but then comes down, and the hourly closings, the continuous hourly closings are still below the 7,700, and the daily closing is still below the 7,700. So that is the failure. Okay, failure is not like that it will hit and it will come down immediately. No, we judge or we look into the failure through the hourly closings, 4 hourly closings, and the daily charts. Sorry, the daily closings. Only the closings matter. Okay, so in all of these the cases, as long as the S&P 500 is trading below the 7,700, okay, is sustaining below, and all hourly closings are below, and the daily closing is below the 7,700, the S&P 500 will remain in the bearish condition, and the bearish momentum, it will be implied on the S&P 500. Okay, and all of the bearishness that you can think, right? And how long or how far this bearishness will go? Until and unless the Dow Jones or the S&P 500 or the Nasdaq hits the bearish side saturation or the oversold condition. Okay, so this fall will continue until then. Now, what are the standard support levels in the bearish side? Okay, the one is there, that is the 766X level. Okay, this is a very heavy support level. The S&P 500 was supposed to hold at the 766X level, okay, on Thursday, on 20th of August. Okay, but because it came under heavy pressure, that is why we were expecting that S&P 500 will come down to the 764X. And exactly the same I mentioned here, that the more fall from the 7,706X to the 764X. Okay, because of that, the heavy pressure, and that will be enough. That will be enough in the bearish side, means the maximum fall. And the low was approx 7640, 76.39 something, or the low was 7640. But the next day S&P 500 recovered the 766X level. Okay, and sustained above the 766X level, and the closing was also above the 766X level. That is why there are the chances for the 7,700. Okay, otherwise there would not have been any chances. But this does not override, or this does not overrule the struggle, okay, and the bearishness, right? Now, this is the support level, right? But once the S&P 500 loses the support level of the 766X level, there are continuous hourly closings below the 7,606X level, and then the daily closing. Then S&P 500 will come down. Come down to what? Come down to the 7,620.90. This was the all-time high. My level was 7,621, as I have repeated earlier many times. And once again, if you are thinking that I have made up this level only when the S&P 500 hit the 7,621, no. Then in that case, you can read my updates which I mentioned in the month of April and May. Okay, and I repeatedly mentioned that 7,621 will be the maximum in this, the bullish movement, and then there will be the fall. Okay, so anyways, I was saying that this fall, once the S&P 500 loses the 7,606X level, okay, then it will be coming down to the 7,621. This was the all-time high. However, the S&P 500 will not stop here. It will not stop here. Okay, then where the S&P 500 will stop? See, for some time, for a few hours, or at least for a day, the S&P 500 will definitely, the S&P 500 will get support at the 7,621. Okay, there is no doubt about that. Okay, after 766X level, then the 7,621 level, okay, or the previous all-time high. But then the S&P 500 will lose the 7,621, because initially it will try to recover from the 7621 to the 7606x level. Okay, but eventually then it will have to give up. Once it gives up the 7621, then the S&P 500 will be ready for the 7500 range, and in the 7500 it will be coming down to the 7506x level. Okay, this is a very strong support to the S&P 500. As of now, we are expecting S&P 500 to come down and to sustain at the 7506x level. But because the S&P 500 is already trading below the 7700, is trading under pressure, there is bearish momentum through the MACD and the stochastic RSI, not just on the S&P 500 but also on the Dow Jones. Because of all of these conditions, S&P 500 is expected to come down to the 7506x, but this will not be the absolute low. The S&P 500 will come down, will lose the 7506x, will come very near to the 7500. Okay, the level will be the 7502x. Okay, this is not the 76 just like 7621. This is a different level. Okay, will come down very near to this, then come down to the 7500, will hold here. Okay, if the S&P 500 has come down to the 7500 by or before Wednesday, in that case there will be heavy chances S&P 500 will enter into the 7400 range. Now question is that when the S&P 500 comes down to the 7400 range, then what will help the S&P 500 to hold? Okay, the final and the last, okay, the heavy support is the 7404x level. This is the last support, and for now this the current fall in the S&P 500 is allowed up to or around the 7404x, and S&P 500 will hold. And if the S&P 500 has come down to the 7404x level by or before Thursday, in that case there will be some chances that S&P 500 will recover back to the 7500 psychological mark. Means at least it will try to recover. Okay, but because the long-term trend is still bullish, there will be chances that S&P 500 can recover the 7500 psychological mark. Okay, but this is the bearish side movement. This is the bearish side flow in the S&P 500. And whether the S&P 500 is going bullish or bearish, this picture will be very much clear on Monday. Okay, based on the closings and the movement. And if there will be any doubt, then by Tuesday this will be very much clear. Okay, that whether the S&P 500 will actually sustain and hold bullish, and if there are any chances for the new all-time high, or if the S&P 500 it is simply going to come down. Okay, and yes, when it comes down, then there will be the two conditions: whether the S&P 500 will come down to the 7500 range or will come down to the 7400 range. Okay, so the 7500 range, okay, it is almost confirmed based on these the conditions, as long as the S&P 500 is trading below the 7700. Okay, but 7400 is conditional, and I suspect that by the time the S&P 500 comes down to the 7400 range, it would have already hit the bearish side saturation and the bearish side oversold. If this condition is not seen in the S&P 500, the saturation and the oversold, then this will be seen in the Nasdaq. Okay, this will be there. But guys, no matter what happens, I will keep you posted. I will keep you updated through these the daily precise updates which I give to my Patreon community members every day from Monday through Friday. And if you also want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. So guys, please subscribe to my YouTube channel if you have not yet subscribed, and please hit like to appreciate if you have liked this video, and also please hit the hype button on YouTube to show your support. And guys, if you have any questions that you want to ask, then please feel free to ask your questions through the comment section.